Very good evening. This is another of the XENA family's show wherein we have amidst us a very great elite personality. This is Swaminathan Murli before you, a member of the XENA family from Chennai. And we have with us Mr. Manish Agarwal, a leading financial personality who has his specialization in various aspects, starting from an IIT graduate and an IIM Ahmedabad. And he has a lot of information to share with us, mainly about, we all have been talking about our own human wellness, our body fitness, and all those things. Now he has a salient feature of financial wellness, wherein finance or the money baba money is the be all and end all of life these current days, wherein both husband and wife or the family members have to earn and work hard to earn a penny, and whatever we earn is not sufficient in this rat race. However, here he is here with us to make us this hard-earned money, how to effectively utilize it, and he lead us a kindly light on the wellness of finance as well as our living, hopefully in a very prospective, finance burden-free life. Mr. Manish Agarwal, a brief about him, as he has been a sparkling student right from his IIT days, and he has a wonderful, wonderful career topping in CAT and from a prestigious B school of IIM Ahmedabad. And he has learned all the nitty-gritty experiences, all the hard-earned case studies, with funny case studies I understand IIM has, and we'll be chit-chatting with all these issues as we go ahead. Over to you, Mr. Manish Agarwal, for a brief introduction about yourself as well as what speciality is up your sleeve, so that we can be enlightened for the benefit of not only the XENA family but also one and all around the globe. Over to you, Mr. Manish.
Thanks, Swami. We are so a little bit about myself. I graduated from IIT Kanpur batch class of 1992 BTech, and then from IIM Ahmedabad class of 1995 in the PGDM program. It is also called the PGP program. After that, I joined Citibank, and I spent about 8 years in or 10 years in banking and financial services. And post that, I worked in the BPO space, where I was the director in Dell, and then I was the chief. I was also the vice president of strategy research and innovation for Deloitte US, based in India.
Oh, great! That's a
My
great
last
profile.
corporate assignment was with a solar energy firm, where I was the chief operating officer, but I had the P&L responsibility. And in between, for 4 years, I was a visiting faculty at business schools in Singapore, Dubai, which is SP Jain, and in some IIMs like IIM Indore, IIM Udaipur, and
Wow.
IIM Raipur in India. Since 2018, I have been involved with financial advisory, where I help individuals and families and trusts to manage their wealth, and also support them with their insurance needs.
Great.
On the side, I am also, not on the side, but really in some ways, I'm very deeply involved with an organization which is called Heartfulness. This promotes meditation all across the globe and a spiritual way of life. I'm a formal trainer with Heartfulness,
Wow.
based at Hyderabad, and I spend and I volunteer my time to for people who are interested in meditation, by transmitting a certain energy which is called pranahuti, which
Wow.
aids in the meditative process of the aspirant.
Wow, that is very interesting. I retired from Rajahmundry, very close to Hyderabad, and I'm very familiar with in and out of Hyderabad as well. And I've got a lot of friends out there who are
Mm.
involved in various satsai sanghs and all these activities, wherein they are also involved in this sort of meditation.
Hmm.
One of my books is on astral planes, which is a
Oh,
part of the,
interesting.
yeah,
Hmm.
because I'm basically a non-fiction writer. The
Hmm.
mind reality connection and all these. You can see my profile in this thing Facebook. Then we have a lot of thought-provoking books like this.
Hmm.
The interpersonal undercurrents and all these things are the gems out there, which I feel I'm very satisfied because I started scribbling as a passion, and
Hmm.
what used to come out is only out of these. No,
Hmm.
please go ahead. Please go and throw more light on your activity about this wellness, and we are eager to hear more about this.
Yeah. So heartfulness, as far as heartfulness is concerned, it's a voluntary exercise. There's no commercial this thing, but the financial advisory piece that I do, that's my bread and butter. That's my profession. And today I would like to take you um, through some of aspects of financial wellness, which very often in our daily lives we tend to overlook.
Well,
So most professionals they work hard for money, and this includes businessmen, of course. But a lot of times we find that they do not make money work hard for them.
true.
And in corporates, you will find a lot of times individuals fighting with their bosses over salary, where probably if they thought a little, if these same professionals thought a little more broadly, that may not have been necessary because they have not been putting
Yeah,
money to work hard for them. They are only working
that's
hard for the money. And there are certain things that we were unfortunately never taught school. And I say that there's a lot of financial illiteracy across the globe and particularly in India.
true.
And some of the things that relate to financial literacy that we were never taught in school is how do we do our taxes? How do we manage our money? Um, they don't even teach you at school how to handle rejection. Uh,
I'll just interrupt here, which I was recollect. I mean, I'm recollecting when I got my first salary from my boss. He said, "Your income minus your savings must be your expenditure," and he
correct,
said, "You fix your savings every month, and it should not be less than 10 to 15% of your income." So
correct.
this was the first step I learned from him. That's how I started into
Yeah,
all these
and we will
basics.
cover
And
that.
today, yeah,
We will cover that as we
please
will
go ahead.
sort of
Please go ahead. Please go ahead.
go along. And while some of these very important things like doing taxes, banking, we were not taught, even health. When in our pre-British educational system, there's a gentleman called Dharampal who has documented how our educational system used to work, and there were 16 courses. One course was taught at a time, and that course lasted for 16 months. And one of the
Oh,
learnings in those 8 months was chikitsa. Chikitsa means how do you do some basic health related
health related.
treatments
Yes, yes.
on your everyday
No
life.
problem.
And while some of these very important things which we require for our daily life, we have not learned or we have not been taught at school, but they have taught us Pythagoras theorem, which most of us, if not all, are not likely to use it in our day-to-day careers.
Absolutely, it's true.
So remember, money is a very efficient employee. So when you employ people in any organization, and some of us who have handled other people, remember when we handle other people or when we employ people in organizations, they take leave, they fall sick, they have other pressures in the family. They work only 8, 9, maybe 10 hours a day. Hard workers work maybe 10 hours a day. Uh, but money is something, when you keep money in an FD, it works 24 by 7 by 365. It does not take leave. It does not fall sick. And it's very efficient. It does not demand anything. It grows at a very almost a
Steady.
certain rate if we have put it in, especially in an FD. So money is a very efficient employee, but we don't probably regard that as a employee, and that has certain implications which we will see as we will go along. And to make you understand the difference, think about the financial profession and the consulting profession. In a consulting profession, you bill the client by hour. So you have X number of hours You might be charging a very high rate per hour, which is what McKinsey and some of these consulting firms do, but still you cannot charge for more than say 10 hours a day or 8 hours a day. Whereas in a financial profession, your income depends not on the number of hours you are spending, but on the total assets you are managing. So, asset manager who's managing 1,000 crores versus an asset manager who's managing 10 crores, the amount of effort will not be in linear progression.
Yes.
So there will be some increase in effort if you're obviously managing 1,000 crores versus 10 crores, but it's definitely not linear, unlike in the consulting profession.
Very true.
So when we look at, and this is a question I often ask individuals who are working in companies, what is your business? And most people will sort of come back and say, my business is, say, managing my business unit, managing the profits of my company, or maybe managing the revenue if they are in sales, or managing the operations. And that's how they will define their
Yes.
business. But think a little more deeply, is that your business or it's the company's business? Essentially, it's the
Yes.
company's business that you are minding and you are getting a salary out of it. So while you are expected to do a good job and nobody is discouraging you from doing a good job, the question you have to ask yourself is that if you are spending 10 hours every day in minding the company's business, how much time are you spending on minding your own business? And what is your business? Your business is to manage the funds that you are getting out of your business or profession or salary and so on. And compare that. So one of the first principles in financial wellness is learn to mind your business. Most of us do not mind our business. The money is left in bank FDs or sometimes in savings account, and when we get time, it's a third order priority, and therefore money stops becoming a efficient employee because we are not minding our business. We are minding the only the company's business. And while minding the company's business is important because that's what you are paid for, we cannot afford not to mind our own
Yes.
business, which is what most of us end up doing. I've had investors who are so busy with their business that they had 86 lakhs lying in some bank account, in savings bank account for several years. And they didn't even, I mean, they mentally knew that it is there, but they didn't take any action to put it to efficient
Efficient use.
investment.
Efficient circulation or investment.
Yes. So effectively, those invested, if they left say 1 crore a year in a savings bank account, they have lost about 18 lakhs just by the very virtue of the fact that they could not find the time to
Investing.
put it to investment. And that is why this minding your business is very important. It's a very significant leakage that a lot of professionals and businessmen have, that they're minding the company's business but not their personal business. I had a very interesting story where one of my investors, she was debating whether to give a gift of 3,000 rupees or 5,000 rupees to a particular relative, and she was getting worked up on that. And when this lady was discussing with me, I reminded her that she has about 200 or $300,000 in US, which is fetching a 1% rate of return. Adjusting for foreign exchange,
Yeah, yeah.
this
That's
thing,
it.
it's about 2 or 3%, which means she has been losing 9% every year for the last 20 years on a figure of about 1 crore. So in effect, in the last 20 years, she has lost about 1.8 crores in funds. And here she is debating whether I can give a gift of
10%.
3,000 or 5,000. So understand that if we don't mind our business, chances are that there are significant leakages in our financial wellness, which can never be made up.
True.
And that will determine, and sometimes they may determine the 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 lack of wellness and thereof.
See, let me interrupt. But in the long run, what is money after all for us? Like, I am fully satisfied. I have a bank account. See, I keep on investing. for the sake of somebody else, say my son or son-in-law, or whatever is that, or whatever is there. And instead of having it out there, I prefer enjoying going out on tours and enjoying it to the best possible thing instead of rotating it in small funds. Yes, we are above average middle income group, and we are well-to-do and things like that. But then at the end of the day, with all these new tax schemes, there is also, I believe, going to be a tax on earning. You'll be knowing better. Tax on hierarchical receipts. For example, if my after my death, if my son is getting an amount, whatever is due for him from my as a hereditary amount, he is supposed to pay around 40 to 50% tax on that. So these sort of things, when if we contemplate on such things, we feel why this investment and all these things. I mean, this sort of a negative approach also crops up. I agree. I agree. We require certain these things. You won't believe I have even planned for my funeral. This sort of planning is done, but all said and done at the end of the day, what am I going to do with all the money?
So the question is, you're talking
Yeah.
of a situation where the surplus is so high that that you really don't bother. But I'm saying,
No, I'm not talking about surplus. If I say surplus is high, I'm not like Ambani or this thing. Even if I would also love to live like an Ambani or something. I don't say that surplus. I'm satiated. I'm satisfied with what I have. When that
right.
level of satisfaction is achieved, then what else is required is the point of view.
So the point here is that you may have you may be satisfied with respect to the to your financial situation and financial status, but it does not mean that, I mean, how many times will people leave money on the table when you are doing a business deal?
That's true. I got your point. I can read through and got your point, everything that way. That's true. Yeah, please go ahead. I mean, I just gave my new thought of life.
My point is, the point I was trying to make was that while it is true that you may be satisfied, it does not mean that you will not mind your business, because historically, a lot of people have lost whatever they had because they did not pay attention to what was happening in their personal finances.
Yes, I do agree. True. Certainly true.
Yeah. So a lot of businesses, for example, have been spoiled because they were the entrepreneur at certain stage left them to the employees, and they did not have the required passion in order to make them succeed.
They did not even have a forethought of diversifying their business or anything like that.
Precisely.
They were stuck to only one, especially the family business. No, like they were not ready to diversify and they got stuck. I understand that.
So the important part, what I'm trying to suggest in this at this point is that irrespective of the amount of funds we have, irrespective of our level of satisfaction with our financial well-being or otherwise, at every point we have to be focused on minding our own business. And part of minding that own business could be that I will leave money in the savings account and I don't care. As long as it is as long as it is a conscious decision.
That's true. That's true.
A person who has 500 crores and he decides to leave 1 crore in a current account, it doesn't matter.
But right? for a person having just 50 lakhs, it matters.
It matters. That's the point I was trying to
make. I agree.
As long as you're minding your business, it's perfectly okay that you are taking certain decisions.
Certainly. Beautiful. Please go ahead.
Yeah. So let's understand the nature of money. And when I was very young, I come from a very Marwadi family. And my father was a businessman. And one of the things he told me when I was about 12 years of age, he put it in Hindi. He said, "Paisa paise ko kheenchta hai," which in English, when translated, what it means, money pulls money. And wealthy become
richer,
wealthier, because money pulls money. So if you already have wealth, you pull more money. Whereas if you look at a normal person, he's struggling to
make money.
Just offer his services in order to
make his ends meet. Yeah, true.
Yeah, make ends meet. And this is the data I'm giving you from Raghuram Rajan's book. It said, since 1979, out of every dollar of income generated in the US, 59% of it went to the top 1% of people in the US.
True.
That's an example of how money pulls money. And we have to
be like the 80-20 principle, yeah.
Yeah. No, it's not 80-20. It's 1 to 50.
I got it. I'm just comparing with that.
Yeah. So the important part here is that if you don't come into a stage where you can be in a situation where you are saying now money pulls money, all your life you will keep end up working for money. And just to give that point that out, 26 people on the planet own as much wealth as 50% of the top 26 people in the world own as much wealth as 50 the bottom 50% of the world.
True,
This
very
gives you
true.
a contrast of how wealth is distributed and brings us to the point that money pulls money.
Money.
Now, what is
But
different? Yeah, please.
what is the reason why people having money are reluctant to invest in new ventures, like maybe the risk factor, of course, but invest in new ventures so that they can, number one, generate more employment, and number two, make themselves more familiar with the people around and get a name and fame and see, initially, they might have to say sell out around 50, 100 crores. But then in the long run, that will become a big this thing. Just now, of course, of late, I've been seeing some small micro and I was advising the MSMEs also as ONGC's part. We were giving all the benefits to MSMEs and how they can develop with various things so that we can help them buy their products so that we are very quality conscious and how to make it a bit more quality conscious and all we are giving them more training and things like that. So this sort of a mindset of helping other small scale industries is not coming up among the. So that is where the whole thing is lacking. Take for example even the textile industry. I may be wrong. Textile industry, we find very few Vimals, Raymonds, and things like the Bombay dye and things like that. Now, once the Bombay's looms, which are once flourishing, all have gone down mainly because of not proper handling. Had it been, I mean, had they had the capacity to diverse, I mean, I'm going a little bit into management for now, compared to your financial aspect. So this is what I was trying to explain. Yeah. Please go ahead. Please go ahead. Sorry for the interruption. Vented out my views. Yeah.
So what I was suggesting was that if you look at wealthy people and how they are different from people who are not wealthy, I call it the wealth mindset. And the wealthy people, they have a mindset of excess. I mean, their underlying belief, and this is the belief in which they operate, is that I have more than what I need. I have more of everything, and I have shortage of nothing.
True.
And whatever I need, I will make it happen. That's the mindset that they carry. And this mindset actually comes from a reading of nature. So in nature, if you see, say one tree, guava tree, will give you, say, hundreds of fruits, and each fruit will give you, say, 10 seeds. So one tree is able to propagate itself at least in 1,000 ways. No matter how much wastage, it still propagates itself. Similarly, if you look at natural resources, whether it is air, water, earth, we have excess of everything. So in nature, everything is in excess. It's just that we have mismanaged, we have been greedy. For example, there was one data which I saw, which indicated that the entire population of Earth, if it was housed in villas, not in flats, we are not talking of flats, we are talking about villas. The entire population of Earth can be only be populated in Texas. They will all have villas. So the important part is that the wealthy people, they have a mindset of excess. They believe everything that they require, they will organize if they don't have it.
True.
And if you look at some of these rich people, I speak to a lot of rich and a lot of poor people. If I go to a poor person and I ask him, have you ever lost money? Some of them will say yes, some of them will say probably no. But if you go to a rich man, he will never say, I've never lost money. But I can show you a lot of poor people. So rich people, there's not a single rich man who can ever say that I never lost money. But I can show you a lot of poor people who would have never lost money. So I'm repeating this point, which is point to ponder.
Yes.
No rich man can ever say that I never lost money. But I can show you a lot of poor people
So
who will
you
say that they never lost money. And this is something to think why. That the rich man is taking reasonable risks. And when they're taking reasonable risks, they're losing some, winning some, and therefore they are rich. Whereas the poor man, he has a
there's
what?
nothing to take risk here.
Yeah, his mindset, more important, nothing to take. He can take risks, but his mindset
Mindset.
is risk averse.
True.
I should not lose.
True.
So think about people who have money. Do they work harder? Are they more educated? Are they more intelligent? A lot of them you will find they don't fall in this
Correct.
category. So when we sort of zero in on the difference between wealthy people and non-wealthy people, one very important difference is that wealthy people, they own assets, whereas the not so wealthy people, they never own assets. So think about our software industry. In the software industry, every coder is creating an intellectual asset, but that asset belongs to the company, the owner. This person who is coding, he's very content getting his salary. He's not bothered about owning the
Company. Company.
asset. All rich people, they own assets. Keep that in mind. Whereas all these salaried people, their mindset is that of a what I call as a Shudra. What is a Shudra mindset? Shudra mindset is I will work from morning till evening and I must get my daily wage. No, of course, you can accept that the daily wage will come end of the month. But I want my
Salary.
daily wage.
Right.
Whereas if you look at the rich people, they don't think in terms of, they always think in terms of owning assets, whether it is companies, whether it is real estate, whether it is intellectual asset or something else. But they will always own an asset which will give them a certain cash flow. And I'm giving you one example. Think about the oil industry globally. In the oil industry, the cost of drilling oil is about $5 a barrel. Whereas if you look at oil sold in the international market, it is about $70 as at
$20.
today's price, and at some point it was $120. But at today's price, it says $70. What is happening to the remaining $65? It is going in somebody's pocket. Some is a very small cost of transportation, which is very small, but the rest is going into somebody's pocket. Now let's think where it is going. Now think about what United States has done and all these Western companies have done. They went to all these oil fellows, the wealthy monarchs of these kingdoms, and they said, see, you don't know how to take out oil. We know how to take out oil. So my companies will come and drill here. I'll pay you a part of the, if I'm drilling at say $5, I'll give you maybe $3, $4 over and above that. But by the way, if you don't agree, my forces are stationed next door. We will throw you out.
That's true.
In other words, what they have done, if you think about it deeply, they have first brought in what I call as Brahmanical power, the power of knowledge. And they said, we will drill oil for you. And they combined it with Kshatriya power.
Brute force. Power.
Kshatriya, the power of the Kshatriya, saying, I'll enforce my
Way through.
rules. So by combining Brahmanical and Kshatriya power, they are able to make super normal profit. That's why if you go to the balance sheets of Exxon, Mobil, and all these companies, Shell, you will find $500 billion, $700 billion of cash they are sitting on. Not because they have done anything extraordinary, but because as a state, they have enforced, they have brought in both Brahmanical and Kshatriya power together. And that's how money is made. Whereas if you look at Indian businessmen, they are continuously struggling to make 10, 15% profit in whatever business they are in. So
True.
remember, salary earners will never make it big in life. They will never have money. no matter how high the salary. So think about it like this. For a senior middle management person in India, say a salary of 1 crore is a reasonably high salary.
Yes.
In a salary of about 1 crore, this person will end up paying approximately 40 lakhs or
Of
35 to
tax.
37 lakhs in tax.
Tax.
He will be left with 65 lakhs. And a person who is earning 65 lakhs will spend at least 25 lakhs on his
Family.
family expenses. He will be left with 40 lakhs. And let's say this person earns this 1 crore on a time value based money as of today. For the next 10 years, he will be sitting over 4 crores. And remember, in 4 crores, he cannot buy a two-bedroom flat in
For
South.
use.
In Bombay, you won't get a two-bedroom.
EPC.
So no matter how high your salary is, you can never become wealthy based on salary. The only way you will make money is if you own an asset. That asset could be a stock, that asset could be a real estate, the asset could be an intellectual property, or so on. If you don't own an asset, no matter how large your salary is, you can never become rich. You will continue to struggle with your salary. Now, we shift gears a little and think about our expenditures. And if I ask a normal salaried person, what is your biggest expense? So typical answers you will get is either it's a children's education or maybe it is house rent. A lot of people pay very, say 30-40% of
Yeah.
their salary only in house rent.
Houses.
Now, I always ask this question. You are saying this is your biggest expense. Now, have you ever looked at your salary slip? They said, yeah, we have looked at our salary spreads. This is the credit. I said, fine. What is your top line? So they will say, this is the top line. Say, how much tax are you paying? And typically, you will see high salaried people paying very high amounts of tax.
Mm.
And if you look at that figure, and I say, now compare it with the thing that you thought was your highest expense, whether it was schooling or uh, whether it was housing. And you will notice that your highest expense is either equal to or less than the tax you are paying. In other words, you don't know what your highest expense is. You are trying to get financial wellness, but you don't know what your
Highest expense.
highest expense is. Now think about the entrepreneurs, the company that you are working for. What is their mindset? Or let's look at what your mindset is. Your mindset is this is the salary I get. From this, I will eke out an expense. I will have some family expenses, and the remaining I will go and save. Now think about the company that you are employed with. How is the entrepreneur thinking? He's thinking, I have a certain top line. I'll spend all that I can. And after spending, whatever is left is my profit on which I will pay tax. You are struggling for your expenditure because you have made a mental assumption that your net salary is what you have to,
Right.
from this you have to manage. So you are continuously struggling with your expense. Whereas the other person, in a mindset sense, he's saying, this is my top line. Out of my top line, I'll spend as much as I can. Whatever is left, I'll pay tax
Taxes.
on that. Whereas what you are saying, this is my top line, my taxes are a given. I will manage and struggle and manage within the remaining amount. Now think about when you own a car, what happens? If you buy a 15 lakh car, what this chart shows you is that you end up paying about 18 lakhs or 19 lakhs to the government in taxes over the life cycle of a car. So 18 lakhs, if you're paying, or 19 lakhs, if you're paying over the life cycle of the car to the government, are there better options? Why not rent it?
Not hire it everywhere.
Sorry?
We can hire cars and go out whenever we want.
Precisely. Why own an asset, a consumption asset, which instead of giving you a cash flow is sucking cash flow out of your
Okay.
pocket? In fact, it is a very interesting episode in my own life. I was shifting from one location to another, and
Mhm.
my wife had bought a second car there in that location.
Mhm.
So I told my wife to sell it because I knew that we will not need this car here, but my wife wanted a second car so that she's more comfortable. And I told her, I made an offer. I said, you call a taxi, even if you want to buy 200 rupees of vegetable and the taxi costs 1000 rupees, I'm fine. And she didn't take the offer. What I had mentally calculated was that no matter how much she spends on taxi, I mean, my keeping a 15 lakh car costs me about 30 to 40,000 rupees a month.
True.
She cannot spend that much in taxi, no matter how many times she wants to go out. So, are we paying attention to our hidden expenses? Expenses that we may sometimes not be
Knowing.
aware of. Now, let's look at who pays income taxes. Only 3% of the citizens in India pay income taxes. And of course, there's a differential in which a business pays less tax compared to salaried. I'm not getting into the detail because with the introduction of GST, that equation may not be as favorable as it was earlier. But the important part is, are we thinking along these lines? Now, think about another very important expense, which I call the educational expense scam. And especially those who send their children to American universities, especially at the bachelor's level. And what you will find is that a typical university education at a bachelor's level in US will cost between about 2 crores. And after 2 crores, you're not employable. Keep that in mind. You don't get a single penny of income. So mentally, when I was thinking about my children, I said, if I have to pay 2 crores for bachelor's degree in the US, I would rather give 2 crores to my child and say, sit at home and enjoy yourself. Sip your cup of coffee instead of going and struggling in a,
Remote area.
never be short of daily bread. And I had very interesting experiences in business schools at Singapore and Dubai, where some of these children who were coming, they were paying exorbitant. And what I found was, and I tried to understand why the parents of these children are able to afford these exorbitant fees. For say 4 years bachelor, they were paying at that time 1 crore rupees, which is 10 years ago. And what I found ultimately through some research was that the situation was like this, that these were children who were no good at studies and they were not bothered about studies. Now they were a nuisance at home.
Oh,
So what and
that
the
is also
parents were very successful parents, because remember, successful parents are financially not unsavvy. So I was continuously thinking, how come their parents are so stupid to spend so much money here for them? Then I realized that these parents are realizing that these kids, they'll become a nuisance if they stay at home. So they are saying, let's send the child abroad. 4 years we will be
out of it
free of the
easily.
nuisance. And I can continue to focus on my career because both husband and wife in typical cases are working and they are in very high profile jobs. So they are saying at least for 4 years, I can continue earning more than what I will be paying to for the kids. So it's
And
really not education. It's just trying to make sure that their life is not getting affected by the nuisance of the child, and they are going to a safe place. Singapore relatively is a safe place compared to say United States, and also more accessible. Apart from taxes, when you keep a 20 lakh car, you end up paying about 8.6 lakhs rupees
yeah,
every year. Most of us may not be aware of these type of expenses that we are silently incurring without being conscious of it. It's not that we cannot afford it or we should not afford it, but sometimes we are not conscious of what we are
true.
doing. And depending on the situation, we can always evaluate whether it's worth it to say rent a car rather than buy a car. Now, in this slide, I'm trying to show you the effect of savings. And just look at two very interesting data points. That if a person saves 20,000 rupees every month for 30 years, and he gets an annual rate of 8%, he gets a in corpus of 2.99, almost 3 crores. But if the same money is invested, say, at an average rate of return of 12%, the corpus almost doubles. It's all more than doubles. It's 7 crores. And if you go down and if you save, say, 1 lakh rupees every month for 30 years at an 8% rate of return, your corpus at the end of 30 years will be 15 crores. But if you get a 12% rate of return, the corpus will be 35 crores. And a lot of people, especially our old folks, you will see they don't worry about the rate of return because they want the safety. And by the end of the career, that 8% would have, out of that 8%, 6, 7% is already eaten away by their inflation.
Protein inflation.
So they are hardly, because they are not conscious of what a very low return, safe investment is doing, they are losing out very big on their financial planning and thinking. And they are struggling towards the end of their life when the opportunity to make money is also limited.
Yeah, this is what I was planning to say. You say about a 35%, 35 crore return. Um,
Corpus.
yeah, 35 crore corpus. Now, the return it'll be, see, ultimately when we are returning, we're getting back the cash, it'll avail capital gains tax or whatever is there. And that will also be taken into account.
Yes. So you assume a post-tax return. See,
Okay.
capital gains on certain
Say 15%, say 12.5% as a
12.5% now. Yes. It's not a big deal.
It's not a big deal. That's true.
Compared to
Even
salary.
then it works.
Yeah.
Even then it works.
Compared especially to salary, where you were paying 35%, 37% of your money to the government.
Exactly. That's true. That's true. Nice.
So remember, poor people become rich by saving and investing. This is what Indians have been doing in the last 30, 40, 50 years. And rich people become poor by borrowing, and this is what is happening to America as of now in the last 20 years. That they are rich and they are becoming poor by borrowing and consuming. And America is the only country in the world where people take a loan to buy things they do not need.
India is not less.
Now we are seeing this culture in India, and it's going to lead to the same disaster that America is heading towards.
Yes. Nice.
So these figures are very old. So student loan by now would have crossed about $2 trillion. Consumer loans would have also crossed by now $2 trillion. Now we are setting a situation where people are not able to pay their credit card debt for buying groceries in US. We have reached that situation because of debt. And the US government debt has already crossed 3.35 trillion US dollars. They can never repay it except by printing money, which is what they are doing. So, so here is some good advice on Warren Buffett, who is one of the best investors of all times, at least in the last 100 years. He said, never depend on a single source of income. And to that, I've added that build encashable skills post your job sustenance. In the private sector in particular, your longevity in the job is not guaranteed, unlike in the public sector. So you need to have post-job sustenance skills. You may not make as much money as you are making in the corporate sector, but you need to have some skills which can be encashed for a decent living.
True.
This is a very famous one from Warren Buffett. He said, if you buy things you don't need, you will soon sell things that you actually need. If you you don't need, you soon sell things that you actually need. And this comes back to children needing iPhones, children needing, so my son wanted an iPhone when he was going to college. I told him, if you want an iPhone, my budget is, say, 20,000 rupees. If you want an iPhone, the remaining amount you will have to pay from the future income that you will get. And as we are speaking, he's actually paying me that money back. And this is to instill this idea that if you buy things you don't need, you'll soon sell
what you need.
what you need. And this comes to Warren Buffett's advice of what your boss told you, which is don't save what is left after spending. Spend what is left after
So,
saving.
true.
Remember, your capital gets eroded if the return on capital is less than inflation. This is what is happening to our FDs right now. The inflation figures published by the government are often misleading.
Misleading.
So let me give you a real example. In the US, the way they calculated inflation in 1978 and the way they calculate it now has been revised at least 25 times, which means every 2 years they are revising inflation with the way they are calculating inflation. And they're revising it in such a way that it appears lower than that it actually
Is.
is. I saw an estimate by a person made by the name
But
Mark.
it is the same even here.
Yes, it is here. We
It's
don't have
same
the figure.
here. And that has a severe impact on the CPI index and all those things. Yeah.
Exactly. So there's a person called Mark Moss in US who has estimated, in his estimate, the real inflation of US has been 12% in the last 20 years, not the 4-5% or less than that they
True. True.
publish
Very
every
true.
year. Now, a lot of people want to get rich very quickly. And I tell them that
Fosters.
there are only 4 ways by which you can get rich quickly. First is if you do something
What's
immoral.
legal?
Two is you do something illegal. So if you do the drugs business, it's both immoral and illegal. You will get very high rate of return. The risk of the money will go up.
High risk, high reward.
High risk, high reward. You may not want to take the risk.
True.
Sometimes people take a risk that they themselves do not understand. And they make money and they don't understand how that they have taken abnormal risk. And this is, I will explain this with a joke. So there was this Arab sheikh who threw a very lavish party. And in that party, he had a huge swimming pool, which he put some poisonous snakes in that swimming pool. And before the party started, he announced that anybody who crosses this pool of water, he can have anything, one of the three things. He can have all my oil wells, or he can have all my cattle, or he can have my daughter's hand in marriage. So the moment he announced this, there was a splash in water. And from the other end came a very smart young man. So the sheikh walked up to him. He said, "Congratulations, young man. What do you want? You want all my oil wells?" This fellow says, "No." He says, "Do you want all my cattle?" He says, "No." He says, "Do you want my daughter's hand in marriage?" He says, "No." Now this person, the sheikh, is taken aback. He says, "What do you want?" He says, "I want to know the name of the person who pushed me inside." So, so, so a lot of times we are taking risks which we do not understand.
Understand.
All right. And therefore we might, the fourth place where you can make quickly wealth is if you inherit it. So in fact, some of my batchmates, we met in, say, 15 years back, and we were discussing in the 15 years we have been out of campus, who has made a lot of money. So some names came up, and there was one lady in our batch who was married to one batch person who was 1 year senior to us and who was very wealthy. He runs a very big, well-known company in the country. So we said the debate was that we cannot say that she has made it big because the money belongs to her husband, not to her.
Yes.
So there was a counter argument given that a strategic
Yes.
alliance, if a money is made through a strategic alliance, we should consider it as made it in life, or you have become wealthy. So even a strategic alliance like that, we will consider it as having made it in life and become wealthy. So if you inherit wealth, that's the fourth. Now, if you are getting rich, trying to get rich very quickly, check out in which quadrant you lie
True.
and be very careful because all these quadrants come
With a
with
catch.
their own consequences.
Yeah,
So with this, I think
I think we can
I'll
call it a beautiful session. Thank you so
yeah, I'll
much,
stop and
enlightenment.
we can take questions.
Lovely, lovely. Uh, Reminds me of my son's batchmate when they were in plus two. He was very poor in education, I mean, studies. And with great difficulty, his father was ready to pay a huge sum of, say, 12 lakhs those days as
Hmm,
a capitation fee for him to join one of the prestigious institutes.
hmm,
The son said, "Look, Papa, you give me the 12 lakhs, I'll take care of mine. I'm not going to do any higher education."
hmm,
He invested that amount
hmm,
and bought a multiplex,
hmm,
and today he's roaring business in a roaring business. And here he was ready to take that risk. And like father, like son, a typical Gujarati, I should say.
hmm.
He was, and that's how he made it.
Correct.
So we still envy him. Like I've seen him grow by a very close friend of my son, and they used to play together. And this was what he just hardly a plus two passed child and making money. And whenever we go there, he says offers us free visits to the multiplex and things like that.
Hmm,
I mean, the way he makes money, the see, his whole blood is in making money,
correct.
and he's in by
So remember, education is not. I mean, if you look at, in fact, there is a very interesting episode on this that Larry Ellison, who heads Oracle,
Mhm.
he was giving a talk in Harvard, and this was the commencement address, which means people who were graduating, he was addressing them. And Larry Ellison is known to be very
We can.
rough in his language.
Mhm.
So he said, you guys, I mean, normally in a commencement address, one would think that he will praise them, saying, "You've done well, now go out and do well in life," and all that. He said, "You guys, you know what? If you look at the richest man in the world, Bill Gates, he's a college dropout.
That's true.
I am a second richest man. I am also a college dropout. Steve Jobs is also a college dropout. He's the third richest man in the world. You guys, you have done college. You will end up working for one of these college dropouts for a job which will pay you maybe $300,000 a year, and you will be content with that." So essentially, you're telling them you guys are jokers. Now, obviously, nobody liked this commencement speech. So apparently, it is said that in that commencement speech, somebody shouted, "What does Oracle stand for?" And he gave the answer. He said, "Oracle stands for one real asshole called Larry Ellison."
Nice. Thank you for sharing your precious time. It was really awakening, and especially for the middle class people.
Yeah,
And I'm sure all in the Zena family will certainly appreciate and go through this and really acknowledge and sincerely appreciate your hard
yeah,
work in preparing this and spending your valuable time with your lovely daughter out here. And
yeah.
uh,
And here is my contact details. Anybody who's interested
yeah,
in helping him serve, I don't
yeah.
charge the
I'll
investment.
just take a screenshot of this.